Google profits are in decline. Meta advertising sales are down tremendously. Microsoft predicted a slowdown, and this is the condition across the board. Please remember that these companies led the way during the coronavirus pandemic and continued to grow. But the stubborn inflation and the rising interest rates are breaking the bones of these companies. The consumer spending is reducing compared to the COVID era. In order to survive, these organizations have to realign their supply chain, make warehouse operations more agile, get rid of the mothballing buildings, have to delay their plans to open new facilities, and they have to cut cost from each end in order to survive. In my view, the big issue is that the tech companies haven't really found new and very profitable ideas in years. Despite the enormous investment, there is no new business within Google and Meta, and hence they still rely on ad sales. Similarly, in the last decade, Apple has not made a significant innovations, and most of its profits are coming from the iPhone. Data indicates that the slowdown is more aggressive among companies in young markets such as crypto and the gig economy, but these trends also prevail in the chip markets. The value of Bitcoin has plunged by 2/3. Uber has slashed spending. Semiconductor companies are cutting cost on factories and machinery as the sales of PC and the smartphones are down. I think that the rising energy costs and the supply chain disruptions are part of the problem. These companies have to look at the growth from a different angle, reassess their market segments, and try to attain consumers and investor confidence. Because of all the above, cutting down on a human resource seems like an easiest way out, which I'm not sure will be a good idea in the long run. But they must retain the smart brains at all cost.